In 2022, a 22-year-old trader in the United States opened a futures trading account on a crypto exchange. He deposited $2,000. He selected 10 times leverage on a Bitcoin trade. Within 45 minutes, his entire account was gone. Liquidated. Zero. Not because Bitcoin crashed. Bitcoin only moved 3% against him. 3%. But with 10 times leverage, a 3% move against you means a 30% loss. And with enough leverage, even a small move in the wrong direction wipes out everything you put in. This is futures trading, the most powerful and most dangerous tool in all of crypto. And today, we are going to cover every single thing you need to know before you ever touch it. Later in this video, I am going to show you the one setting on Bybit that most beginners never change, that automatically puts them at maximum risk the moment they open their first futures position. If you change nothing else after watching this video, change that one setting. Stay with me. Futures trading has a reputation, and most of it is deserved. Studies from crypto exchanges have shown that between 75 and 80% of futures traders lose money. The leverage that makes massive profits possible is the exact same leverage that wipes out accounts in minutes. And yet, futures trading attracts beginners like moths to a flame. Because of the stories, the screenshots, the people online showing $10,000 profits from $100 trades using 100 times leverage. What they never show you is the 10 accounts they blew up before that one winning trade, or the fact that they risked everything on a coin tip from a Telegram group. Futures trading is not a shortcut to wealth. It is a precision instrument. Used correctly, it is one of the most powerful trading tools that exists. Used incorrectly, it destroys accounts faster than anything else in crypto. Today we learn to use it correctly. So what actually is futures trading? In spot trading, which we covered in the last video, you buy a coin and you own it. Simple. In futures trading, you do not buy the actual coin. Instead, you open a contract that speculates on whether the price will go up or down. And here is the key difference. You can profit whether the price goes up or down. If you think Bitcoin is going up, you open a long position. You profit as the price rises. If you think Bitcoin is going down, you open a short position. You profit as the price falls. This ability to profit in both directions is what makes futures trading so powerful. In a bear market, when everything is falling, spot traders can only watch their portfolio shrink. Futures traders can actually make money from the crash. Now, leverage. Leverage is borrowed capital that multiplies the size of your position beyond what you actually deposited. Here is a simple example. You deposit $100. You select 10 times leverage. You now control a $1,000 position. If the trade goes in your favor by 10%, you make $100 profit. That is a 100% return on your original $100 deposit. Sounds incredible. But here is the other side. That same 10 times leverage means a 10% move against you wipes out your entire $100 deposit. A 10% move, which in crypto can happen in minutes. And with higher leverage, say 50 times or 100 times, even a 1 or 2% move against you triggers liquidation. Your entire deposit is gone. The exchange closes your position automatically. Leverage amplifies everything. Wins and losses equally. Now let us look at Bybit specifically. On Bybit, go to Derivatives. Then select USDT Perpetual. This is the most common futures contract type for beginners. It has no expiry date, meaning you can hold the position for as long as you want. You will see the same elements as Binance, a price chart, an order book, and an order form, but with two additional elements that do not exist in spot trading. First, the leverage selector. This is usually displayed as a number with an X beside it. On Bybit, the default is often set very high, sometimes 20 times, sometimes higher. This is the setting most beginners never change. Change it immediately. Set it to 3 times or 5 times maximum to start. Low leverage keeps you in the game long enough to learn. High leverage removes you from the game before you understand what happened. Second, the liquidation price. This number tells you exactly how far the price needs to move against you before your entire deposit is wiped out. Always check this number before confirming any futures trade. If the liquidation price is too close to the current market price, reduce your leverage or reduce your position size. Let me tell you about 2 futures traders. Both started on Bybit on the same day. The first, Marcus. Marcus saw a YouTube video showing someone making $10,000 in one day with 100 times leverage. He opened Bybit. Left the leverage at the default setting, which was 20 times. Put in his entire $500 deposit on one Bitcoin long trade. Bitcoin dropped 2% in the next hour. Marcus was liquidated. $500. Gone. In 60 minutes. The second trader, Priya. Priya had watched this video. She opened Bybit. Immediately changed leverage to 3 times. She put only $20, 2% of her account, into her first futures trade. Bitcoin dropped 2%. Priya lost $1.20. She closed the trade. Reviewed what happened. Opened another trade the next day. 6 months later, Priya had grown her futures account consistently. Not because she had a magic strategy, but because low leverage kept her alive long enough to actually learn. Marcus never traded futures again. Same platform. Same market. Completely different outcome. Because of 2 decisions made in the first 60 seconds of setup. Right. Risk management in futures is not optional. It is survival. Rule 1. Never use more than 5 times leverage until you have at least 6 months of profitable futures trading experience. Ideally start with 3 times. Rule 2. Never risk more than 1 to 2% of your total account on a single futures trade. This is even more critical in futures than in spot, because leverage amplifies losses. Rule 3. Always set a stop loss before your trade is confirmed. On Bybit, you can set your stop loss in the order form before clicking confirm. Do this every single time. Rule 4. Check your liquidation price before every trade. If the liquidation price is within 5% of the current market price, your leverage is too high. Reduce it. Rule 5. Never add money to a losing futures position hoping it will recover. This is called averaging down in a leveraged position. It almost always ends in liquidation. Let us do one practical example to make this crystal clear. Bitcoin is currently trading at $50,000. You believe it is going to rise to $55,000 over the next week. You open a long position on Bybit. Account size, $1,000. Risk per trade, 2%, $20. Leverage, 3 times. Position size, $60. Stop loss, set at $48,000, a 4% drop. Take profit, set at $55,000, a 10% rise. If Bitcoin rises to $55,000, your $60 position with 3 times leverage returns approximately $18 profit on $20 risked. If Bitcoin drops to $48,000, your stop loss triggers. You lose approximately $8. Controlled. Planned. Recoverable. That is futures trading done correctly. Small controlled risk. Clear profit target. Clear exit if wrong. No emotion involved. If you want me to walk through live futures setups, leverage calculations, and real trade ideas with you, join our Telegram community. The link is in the description. I am in there every day. Come join the conversation. Here is the bottom line on futures trading. Futures let you profit in both directions. Long when price rises, short when price falls. Leverage multiplies both your profits and your losses. Default leverage settings on Bybit are dangerously high. Change them immediately to 3 to 5 times. Always set a stop loss before confirming any futures trade. Check your liquidation price on every single trade. And never risk more than 1 to 2% of your account on any single position. Futures trading is not gambling when you approach it with discipline and proper risk management. But without those two things, it is the most expensive lesson crypto has to offer. In the next video, we cover something that every crypto user needs to know regardless of whether they trade or not. How to send and receive crypto safely between wallets and exchanges. One wrong character in a wallet address and your money is gone forever. We cover every detail so that never happens to you. Subscribe right now so you do not miss it. Drop a comment below. Are you planning to try futures trading? And what leverage are you going to start with after watching this video? Tell me below. I read every comment. See you in the next class.